Investors are increasingly seeking refuge in safe haven assets as concerns over a potential recession continue to grow. JPMorgan's decision to raise its recession odds to 40% has only added to the sense of unease, prompting a flight from risk assets and a surge in demand for traditional safe havens such as government bonds and gold. JPMorgan's recession warning. JPMorgan's decision to raise its recession odds to 40% is a significant development, as it suggests that the bank's economists believe the risk of a recession is increasing. This warning has sparked a wave of selling in risk assets, including stocks and corporate bonds, as investors seek to reduce their exposure to potential losses. Investor flight to safety. As investors seek to reduce their risk exposure, they are flocking to traditional safe haven assets such as government bonds. The yield on 10-year U.S. Treasury bonds has fallen to historic lows, as investors seek the safety and liquidity of government debt. Gold. The price of gold has surged to multi-year highs, as investors seek a safe haven asset that is perceived as a store of value. Currencies. The Japanese yen and Swiss franc have also benefited from the flight to safety, as investors seek the perceived stability of these currencies. Implications for financial markets. The investor flight to safety has significant implications for financial markets, including increased volatility. As investors seek to reduce their risk exposure, markets are likely to become increasingly volatile, with sharp swings in asset prices. Reduced liquidity. The flight to safety is also likely to reduce liquidity in risk assets, making it more difficult for investors to buy and sell these assets. Economic slowdown. The increased risk of a recession and the resulting flight to safety could also contribute to an economic slowdown, as investors become more cautious and reduce their spending and investment.